Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 33rd COT report in 2014. As usual, we're going to start off with the changes in commercials position. So here we go. As you can see, we've got a Palladium on top of our list with a 38% change in commercials positions, 42 in large speculators. Of course, it's pretty visible that we've got all-time extremes both in commercials and large speculators. Well, first of all, let's start with the change signal. You can see the change over here being much larger than average. It may actually be the largest change in this 52 weeks range. If you look at the chart, you can see a pretty decent correlation between larger changes and reactions from price. So we can state that this sell signal is pretty significant, and we may see some reactions from price to it. But let's have a look at the all-time extreme. Here we go. You can see it over here on the chart. Yeah, we've barely moved above the all-time. The last it was over here in 2013, and we're receiving this sell signal again. You can see how price reacted to this sell signal. It wasn't a major change in the trend. It's definitely there. The extreme is here. Of course, bear in mind that these extremes may widen for quite some time before we see a reaction from price. So, but still, it's a market that we should pay attention to in the upcoming few weeks, month maybe. Let's move on and have a look at soybean meal, where we have an 18% change in commercials positions. You can see the change over here. We've got some pretty hectic price movements. Of course, this may be simply a rollover in contracts, but anyhow, let's have a look at the chart and see these correlations between price and the COT change signal. You can see the examples I'm trying to show you right now, that again we found another market where the COT change signal is an effective signal that we can count on. Let's move on and have a look at the wider picture. Here we go. You can see that we cannot really talk about a significant extreme. The last extreme that was a bit larger than average, so-called relative extreme, if we look at this, let's say 2.5, 3 years time range, we can say that it was more of a bullish extreme. But if you look at the 5 years chart, you can see how far away this extreme was from all-time levels, and you can see how well this all-time extreme signaled this rally. So it's really the change signal that that may affect prices in the soybean meal right now. The Japanese yen, our next market, we have a 13% change over there. Not that large. In my opinion, if you look at the chart, we do see greater changes in the past. But anyhow, it is a bullish change signal. You can see we had some larger change signals back over here, effectively pushing prices a bit higher. Question, of course, would this change size be enough to end this bit of decline in the Japanese yen? Well, that's a big question mark over there. But let's move on and have a look at the extreme again. 5 years chart, here we go. You can see it over here. Not a major extreme. It's still, of course, definitely more bullish than bearish. No question about that. The question is whether this is strong enough to influence prices to go back up. In my opinion, this extreme may easily get larger. And I'm just saying it as a possibility. I'm not saying it's going to happen. I'm just saying be pretty flexible with your analysis and bear in mind that these extremes can widen. I mean, if you look at the chart back over here in 2012, it was an all-time extreme. Nobody thought that it's going to get even larger, and it could. And actually, we're still over there, and we're unable to get to decrease the stress level in the market. So the stress is there, and it may influence prices sooner or later. Let's move on and have a look at the large speculator COT Extreme. Well, we talked about Palladium, so let's move on and have a look at the natural gas market, where we have 141 report extreme in large speculators. You can see the extreme over here. It is a bullish extreme signal. It's definitely not an all-time extreme, but it's a significant one if you look at the past 2.5, 3 years time range that may possibly affect prices upwards. And then the Euro market, our next market, with 106 report extreme and large speculators. But hey, you have an all-time extreme and small speculators, so that's an important signal to look at. It is, of course, a bullish extreme signal from all market participants. The commercials and large speculators have still some space left to reach their all-time extreme levels, but small speculators are there, and we may start considering moving to the long side of the market soon. Maybe not now, but it's definitely a stress level that we should pay attention to. And last but not least, the cotton market for this review, where we have a 92 report extreme and large speculators. I've mentioned cotton in the last review, and as you can see, we have a bit of a reaction from prices. So it's a great market. Again, a market where signals are effective, and I think a lot of opportunities lie on the table. So I advise you to consider doing your analysis on the cotton market. That's all for this review. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.